Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Not a bad spot, you will have to say. If you look at the advanced declines, advancing stocks are still a tad more than the number of declining stocks. And of course, Atul Suri just brightened up this atmosphere by telling us that in the emerging market world, we have been rank outperformers. But how is the world looking at India and the emerging market basket? Dehn, the head of research at Ashmore Investment Management, joins us. Good morning, Dehn. Thank you very much for joining us. Now, first, just let me get the global picture clear. Every other day, there's a tariff announced from the US and then it's countered by the Chinese. Can this derail economic growth and financial markets?
No, I don't think so. I think there are clear limitations on how far the tariff war will go. First of all, because so much of production globally is now made across borders through very globalized supply chains, if you impose generalized tariffs, meaning that whole countries isolate themselves from other countries, well, then that has a massive economic impact. And I don't think there's any political appetite for that, neither in the US nor in China. So that limits the trade wars to individual countries, where one country picks on another country. The US has already found that it is impossible to dissolve NAFTA because Canada and Mexico are already so deeply integrated with another. We've seen that Trump pulled back from a trade war with Europe a few weeks ago, and Japan is the last major ally of the US in Asia. So that leaves really only China as one of America's large trading partners that can become the object of America's protectionist urges right now. So I think that the trade war is going to be strictly bilateral between the United States and China.
You know, lately we hear that FII flows into emerging markets have come back. We've seen the numbers improve quite a bit. Has the tide turned in favor of emerging markets, especially markets like India, in the month of August?
Well, I think the tide actually turned a while ago. I think it turned with the first Fed hike in December 2015. And in 16 and 17, we had rather strong performance across EM in general. Local currency bonds made 26% return over those 2 years in dollars. And equities, of course, made dollar returns close to 50%. What we then had in 2018 was a pullback in the early sort of few months of 2018. We did have a pullback in EM. And then we saw a sudden return to investor appetite for EM in July. The pullback, the backdrop for which we had this better performance in July was really not EM related. It was mainly profit taking in Eurodollar that then led to profit taking in EM local markets and then led to a pullback in EM. And we also had the onset of the protectionism in the US. We had a more hawkish than expected Fed, and we had very strong US growth. And all of those factors led to a rise in the dollar, which always makes EM investors nervous. But I think the Fed hiking trajectory is now pretty much priced in. I think we've peaked in terms of US growth rates. I don't think we're going to see the next growth rate at 4.1.
Okay, Jan, what would be your pecking order in the emerging market, and where would India be?
Well, I really like Indian assets. India did very well for a while, and then it had a period of underperformance, particularly in the bond area, when we saw greater signs of fiscal stimulus coming through from the government, and we also had rising oil prices, and we had inflation beginning to pick up, partly because of the imposition of GST and other types of administered prices. But I think that there are two things that are interesting about India right now. One is that the bond yields are rather high, and I think inflation is ultimately going to start declining again over the next sort of 6 months or so. I think RBI is ahead of the curve, which is a good place to be. And so I think bonds do offer some value now, and I expect that we're going to see greater foreign interest in the bond market in India. When it comes to equities, I am very encouraged that we're finally beginning to see a little bit of pickup in consumer demand. We're also seeing that the NPL situation in the banking system appears to be stabilizing. and we're beginning to see some capex.
Okay. Now, if growth is emerging, would you say you want to buy the corporate lenders? I mean, ICICI, SBI, BOB, Axis.
Yeah, I think there might be. There's always a case for making very selective stock selection decisions. I mean, you should also always do due diligence on each individual name. But I think we might see more upside in PSU banks. They've sort of been lagging for a long time. They haven't really caught a bid yet. But if the NPL situation is getting better and the underlying growth story is getting stronger, then that sector might come alive. In general, I would say that I'm more into the sort of consumer discretionary sector, white goods, durables, the sort of larger discretionary items within the consumer space. That is where I think most of the action is going to be. And so I'm a little bit less positive on stables, a little bit less positive on the sort of those sectors that are not so responsive to the business cycle.
So consumer durables would be your favorite.
Yeah, and I think some of the private banks are a little bit expensive, to be honest. So I'm more into the sort of the lagging space within the financial sector. I think that's where we could see a bigger pickup.
Okay, well, in the month of October and November, we have state elections, and then we have the big general election in the month of March. As a foreign investor, do Indian elections worry you?
I don't expect major shifts in the election outcome. I think the government has already, for the last year or so, prepared for this. They have put in place a program which has some populist elements to it. Agricultural prices are being supported, there's more capex spending, more government spending, and so on. And the reforms, which certainly created a drag and created uncertainty, were undertaken relatively early in the political cycle. So we're not going to see any reforms that are going to, make the government particularly unpopular, while we're going to start seeing some of these demand effects beginning to kick in. And that combination should, broadly speaking, preserve the current political setup. So I don't expect any major shifts in the election cycle in these upcoming election tests.
Okay, finally, do you see the rupee at 70? And if that's the case, are you buying the export-oriented sectors like IT and pharma?
Yes, I am. And that's a little bit of a shift. We've been a little bit more skeptical about IT in particular and pharma in particular in the past. Because of protectionism in the United States, more economic nationalism, and the currency. But I think these sectors are becoming more competitive. My expectation, though, is that I think that the recovery in the dollar that we've seen this year is temporary. It's temporary because it has been driven by a fiscal stimulus, which itself is temporary. It has been driven by a more than expected hawkish Fed, but that was really because Jay Powell wanted to establish his credibility early in his term as governor of the Fed, and he has done so already. And I think the scope for surprises from the Fed relative to what is currently priced in is probably more on the dovish side as we go forward. So the long and short of this is that I think we are going to see a recovery in the currency. In the Indian currency versus the dollar over the next 12 months, which will gradually then erode competitive advantages for outsourced sectors.
Okay. On that positive note, thank you very much, Yan Dehn, for joining us. So back to IT as well, but consumption favorite and PSU banks as the lagging sectors likely to be outperformers. That's the word from Yan Dehn. Actually, the markets have not lost much, you will have to say. 11,450 held, and the Nifty Bank's original 0.5% loss is now standing at a 0.3% loss.
The issue is that that dip has not been bought, Lata. So you're still, down about 90 points on the Bank Nifty. And, a large part of that is because you had that big rally yesterday. Anyway, we have Ashwini Gujral joining us again. Ashwini, your thoughts? You reckon today is actually a day to take shots in this market, or you think the declines are failing?
Well, for those who understand a bit of pivots, the first bar on the Nifty and Bank Nifty took out today's intraday pivot, and the rally that came from that first bar low has been a shallow rally. no follow through. So my sense is that today shorts could work out basically because everybody is long and everybody is hoping that 11,500 gets crossed. My sense is that given the global situation, our vertical rally 11,500, today you could have a bit of downside. So right now, good time to get short. I think as people who went long in the morning get further trapped, the market could accelerate on the downside. Having said that, Jet Airways is a sell with a stop of 285, target of 272. Manappuram is a sell with a stop of 114, target of 102. And Bata is a buy with a stop of 950, target of 985. At some point, this decline will become a buying opportunity. So whatever short trades we are taking are intraday and will likely get covered at some point. But today, I won't be surprised if we get a strong trending day, because that will clear out a lot of the weak longs which may have entered in the last couple of days.
Okay, well, for now, you suggested a buy on Bata. Bata has hit a new high this morning, and it has a couple of these other names for company. Berger Paints is at a new high, 4.5% higher on Berger Paints. It's been such a strong stock, a 20% growth this year is what Berger Paints has seen, and now volume pickup there as well. Ashwini, just a quick comment on Eicher Motors, because it's the big nifty gainer this morning, post its numbers, some upgrades coming in from the likes of Credit Suisse as well. You think at any point Eicher Motors would resume its technical uptrend?
See, Eicher Motors is in a sideways zone, 26,500. That was the low 3 days back, and 32,200 thereabouts. If you see other auto stocks like Maruti, etc., autos are going to have a sideways year because you run up for 4 years at a stretch. Now incremental demand will take time in happening. So my sense is that Eicher remains sideways. It could go up to the upper end of the range, but I don't think a fresh high would be possible here.
Let me indulge with one more stock, Ashwini. SBI actually now down 2.5%. Rather than the Nifty, I mean, of course, you recommended a short on the Nifty Bank. Would you also add SBI to it?
See, SBI is now very close to the recap day high. That was about 330. So anybody, any sensible trader who's been in this since 250 does not want to mess around with SBI for the last 10 bucks. So chances are, PSU banks, even with good SBI results, could get into a correction. All of them have run up quite a bit. And I would think that SBI would be a decent buy again around this 290, 300 zone.
Actually, there's a bit of a meltdown in PSU banks today, led by SBI, which is down 3%. Union Bank is the other one which will declare numbers. That also is down quite a bit. Yesterday, the market's reaction to Indian Bank's good numbers was interesting. It started at the high point, ended at the low point. Today, if you see, that one is quite interesting. And if you see the chart of Kotak, which is interesting because now there's a bit of a buying which is happening in Kotak while there's a bit of a profit taking in some of these corporate names. Ashwini, is there a chance that some traders might be now stuck in these corporate banks? And again, today could be a bit of a reversal just, in this sector itself?
See, when any sector looks like now there is no tomorrow, it can only go up. This is what generally tends to happen. But I believe the corporate bank uptrend is likely to sustain, but today could be a fairly bad day on most of these. And these sort of strong corrections at some point become buying opportunities. But today, the way first hour is going, I think today could be a down day finally.
Okay, today could be a down day. Sandeep Wagre is also here with us. So let's get some more trading calls out of the way. Sandeep, hi, morning. What are you looking at? Now the Bank Nifty, in fact, is down almost 0.4%.
Good morning, Sonia. I would go with a sell in a Manappuram Finance, stop loss of 112, target of 104. The move has already come in, and in case that comes in, I think this could go even well below 100. And a buy in a Yes Bank, stop loss of 385, target of 405.
One of the better performing banks today, Yes Bank up about 2% almost. Ashwini, I also wanted to ask you about tech stocks. They are on the green side of the market somewhat, not a whole lot. But any long trades there?
See, NIT Tech, etc., you could buy. But given the way, rupee is moving, it's probably on the stronger side overall. I don't think tech will be able to bail out the market. The big vertical rallies have happened on banks and Nifty overall. So I think they should be able to overwhelm the tech stocks, although people can try to get into a TCS or NIT Tech just because they have corrected quite a bit.
Okay, well, thanks guys for giving us all of those technical ideas. For now, let's also discuss some fundamentals. Tata Communications is under quite a bit of pressure this morning. It's down 6% right now. Reema is here to tell us what went wrong with the numbers this time. Reema.
Hi, Sonia. Well, it was a subdued set of numbers, largely an expected line. So if you look at the top line, the revenues declined by 2.5% on a quarter-on-quarter basis. And if the revenue trend comes up on your screen, you can see it has been consistently falling for the last 4 or 5 quarters from a run rate of nearly 4,300. It's now down to 3,900. On a year-on-year basis, too, the consolidated revenues are down 9.2%. The key reason being a degrowth in voice as well as a decline in the ATM business or the payment solution business. On the back of lower revenues, the margins are, showing a bump up on a quarter-on-quarter basis. The loss seems to have narrowed on a quarter-on-quarter basis to 58 crore versus 128 crore. But the company has been loss-making for the last few quarters. The key segments that it operates in, so one is voice, and that is facing a lot of pressure. Quarter-on-quarter revenues are down 8%. On a year-on-year basis, revenues are down about 33%. And that's because of the pressure that you can see even in the telecom players. So there is a compression in voice minutes as well as major price compression. Data, which is the focus area for Tata Communication, has seen only a meager 4% growth on a year-on-year basis, and that's because of an operator consolidation taking place in India as well as the Ind AS impact. On the ATM business, the company is consciously rationalizing its business. They're closing down the unprofitable ATM business, which is why the payments business too is under pressure, and plus there is that overhang of a large debt. Back to you.
Okay, thank you very much for that, Reema. That stock, Reema explaining why that stock is under pressure, 5% down. Oro is like kind of middling. It rose immediately after the conference call. So early morning we saw a bump up in Oro. It's not held all those gains. Ekta, what were the key takeaways?
Well, no real fireworks this time round, Lata, from the Q1 FY19 call. The management, however, is most bullish about the injectable business. Now that the EIR has been received for Unit 4, they expect approvals to pick up. So they're sticking to their 30% growth guidance for FY19. So sales should be over $210 odd million in terms of the injectable business. The net debt has gone up around $33 million in Q1 FY19, but the overall US-based business has also increased on a Q-on-Q basis. So the company did mention it was basically because of the base business of the company which improved, which led to that Q-on-Q growth. Overall, the company is also guiding for a couple of approvals such as Toprol generic in the US markets in FY19 as well as a couple of important drugs. So they seem to be quite confident about the US.
Okay, thanks a lot for that, Ekta. So that's on Aurobindo Pharma and the key takeaways there. But let's get a quick roundup of what's happening in the commodity space. By the way, before that, Talwalkar's Life, the gym business, the earnings are on your screen. The EBITDA has gone up about 13.5% at 25 odd crores. And, I think that's something that the street does not like. Maybe they were expecting higher growth rates. There's not been any growth as far as the margins are concerned. It's steady, but no growth, 46.7% EBITDA margins for the gym business. We will now move to the commodity space. Manisha Gupta is here to give us a roundup of all the action there. Manisha, over to you.
Thank you, Sonia, so much for that. Well, starting with the crude oil prices, remember it has been about Iran's sanctions, which we have been discussing for a couple of months now, very close to its due date now. First set of sanctions have hit Iran, and this is a reality. And second set is on 4th of November. That is when the crude oil actually features into that list. So while, of course, the Iran sanctions is pretty much factored in at the prices, it really is about how much crude could actually go offline after the Iran sanctions. 1 million barrel plus is what the markets are working with right now. But what is really bothering the crude oil prices, and the reason it is trading quite flat right now, is that the US dollar is strengthened yet again. China imports have declined for third straight month, and China also has dropped crude from its tariff list to US. So that is something that the markets are digesting at this point in time. The gold and silver prices have been quite flat as well. We are closing this week with no losses, no gains kind of a view. The US dollar is back on strength. We have seen very sharp declines in emerging currencies and currencies like a Turkish lira, which is trading at record lows right now. There also has been a decline to a Russian ruble, which also is at record lows as we speak. So markets are really watching out for that. And the view is that with so many tensions in the global markets, we could see some consolidation and close to bottom prices when it comes to this sector. The base metal prices, of course, it's a third straight day of gains onto that one. The US data yesterday has been on the positive side. The copper inventories have been declining, lowest since 2007, and that has been supportive for that. Aluminum prices have gained 5% in last 3 trading sessions. We have seen strong support there. And with the steel prices in China holding at a 6-year highs, it's no surprise that you are looking at ingredients like nickel and zinc trading firm and where they are. Trading strategies, and we have them from Comtrends, which has a buy call on gold. 29,800 is the level that they're watching out for. They have a sell, though, in case of the crude oil prices. 4,535 is their target. And they have a buy yet again in case of the base metal prices, where they are looking at the copper prices inching up to 428 today.